recognized for 5 minutes.
Thank you, Mr. Chairman. So after the 2008 financial crisis, Congress passed the Dodd-Frank Act to put more cops on the beat and prevent Wall Street from wrecking our economy again. One of the protections that Dodd-Frank put in place was to automatically create a special designation for the too big to fail banks. At the time, those with assets of $50 billion or more. So they received stronger oversight by the Federal Reserve. Chair Powell, why did Congress think it was a good idea to put stronger oversight in place for banks above a certain size?
I think it was a wise decision. It was, particularly for the very largest institutions, it was clear at the time that we needed to raise expectations across a very broad range of measures, including particularly capital, liquidity, risk management.
Okay, and we needed better supervision to do that, I take it.
I would agree.
But it isn't just banks that pose a risk to the economy. In 2008, two investment companies, Bear Stearns and Lehman Brothers, failed, triggering the 2008 crash. So when Congress passed Dodd-Frank, they created the Financial Stability Oversight Council, or FSOC, and gave it the power to designate non-bank firms as too big to fail, or in the terms of the statute, to designate them as systemically important, which means they get the same stronger oversight as the too big to fail banks. Is that right, Chair Powell?
Yes, it is.
Okay, so let's look at an example of how that's working today. BlackRock is the world's largest asset management firm, overseeing nearly $9 trillion in assets. That's more than double where it was 10 years ago. It also holds a stake in just about every company listed on the S&P 500. To put that in perspective, BlackRock manages more assets than the entire GDP of Japan, or Germany, or Great Britain, or any other nation in the world except the United States and China. And it's not just size. BlackRock also runs a technology platform that currently houses at least 10% of all the stocks and bonds around the world. So, Secretary Yellen, just hypothetically, if a $9 trillion investment company failed, would that likely have a significant impact on our economy?
Well, Senator Warren, I believe it's important to look very carefully at the risk posed by asset management industry, including BlackRock and other firms. And the FSOC began to do that, I believe, in 2016 and 2017. But the risks it focused on were ones having to do with open-end mutual funds that can experience massive withdrawals and be forced to sell off assets that could create fire sales.
Right.
That is actually a risk that we saw materialize last spring in March. And I think that with respect to asset management, rather than focus on designation of companies, I think it's important to focus on an activity like that and to consider what the appropriate restrictions are. It's not obvious to me that designation is the correct tool to address.
Well, now, wait just a minute. Designation is what gives the Fed its increased oversight power. Is that correct? Is that correct?
Yes.
And is BlackRock currently designated so that it receives that increased oversight?
It isn't designated, but I think it's important to understand.
So that means it is not receiving the increased oversight from the Fed. So my question is, are you currently looking at designation for companies like BlackRock, $9 trillion companies like this?
Well, as I said, FSOC has looked at this issue in the past.
I understand they've done it in the past. I'm not asking about what the last Secretary of the Treasury did. You are the head of FSOC now. The question I'm asking is whether or not FSOC is considering and looking at designation for these large financial institutions.
Well, I think it's appropriate to designate institutions whose failure would pose a material risk to U.S. financial stability.
And that's why I started my question with, does potentially a $9 trillion investment company pose some risk to the American economy if it should fail?
Well, one needs to analyze what the risk is. An asset management company is very different than a bank.
How do you analyze what the risk is if you're not actually doing the investigation through FSOC?
Well, FSOC has undertaken such work in the past, and as I said, when it looked at asset managers, it issued a report outlining what it saw as some of the most significant risks
So I
from those
appreciate that they've done this
industries.
in the past. Are you continuing that investigation now?
Well, I'm just beginning a work program with FSOC, and certainly risk from asset management will be on the list.
I understand that when the stock market is going up, it is easy to ignore risks that can be building up in the system. That was the mindset of the regulators that led up to the 2008 crash, and that is how taxpayers ended up on the hook for a $700 billion bailout of the giant banks. When the party is going strong, it's the job of the regulators to take away the punch bowl. My view on this is that Congress gave you the tools to monitor these companies for risk, and it is important to use them. Mr. Chairman, thank you for allowing me to go a few minutes over with another brief question. Secretary Yellen, I am grateful to you and President Biden for your leadership in enacting the American Rescue Plan. A critical part of this bill is the $350 billion assistance for state and local governments. Some of our hardest hit communities in Massachusetts are smaller cities under 50,000 in population, places like Chelsea and Everett and North Adams. So I want to ask you, excuse me, about how they get help from this bill. Secretary Yellen, in general, communities with populations under $50,000 receive some direct federal funding as a result of the American Rescue Plan, but they don't receive as much direct help as bigger cities. Is that correct?
Well, I believe there's a formula that determines how much they receive, and it's paid to them through states. I believe that's
good. That's where I want to go, because direct funding is not the only money coming into state and local government. In addition, state governments also receive a separate pot of money that was flexibly designed to help our hardest hit communities.
Sure.
And specifically, the statute says that state funding can be used to respond to public health emergency with respect to the coronavirus disease or its negative economic impacts, including assistance to households, small businesses, and nonprofits, or aids to impacted communities. Is that correct, Madam Secretary?
Yes, it is correct.
Good. And in Massachusetts, it looks like there will be about $4.5 billion going to the state government. So, Secretary Yellen, just to be clear, this statutory language provides our governor with the flexibility to use state funding to provide extra help to address negative economic impacts in smaller communities that did not qualify for larger pots of direct funding. Is that right?
That is my understanding, but we will put out guidance and work through all of the legalities. But I believe that what you have said is correct. I want to be very careful about the legalities, but I believe that what you said is correct.
Senator's time has expired.
I appreciate that. Thank you very much. Thank you, Mr. Chairman.
Senator Tiller from North Carolina is recognized.
Thank you, Mr. Chairman. And